Hello, everybody. So you may remember a few months back, I covered Semler, and Semler adopted a Bitcoin strategy. So that's what I'm going to talk about today. But notice how I titled this video, Semler Scientific, a MedTech with a Bitcoin twist, because you're still buying an operating business for a fair valuation, in my view, even a low valuation, some may say. So I'm going to go through the business. Unlike when I cover MicroStrategy, the Bitcoin strategy has dwarfed any operating business. So the operating business is almost meaningless for MicroStrategy. That is not the case for Semler. Semler still has a compelling product, and it's lost all of the premium it had gotten from Bitcoin. It's lost it over the past few months. I find the stock very cheap right now. So Semler, what do? Well, they do a device that is called the quantum flow. So they invented this tool. I'm using the term invented. They designed this tool to detect PAD with a computer and with a machine, and you put it on the finger, and it's fairly easy to use, and it syncs to your laptop or syncs to your tablet, and then you can detect PAD. And they have scientific studies. The Journal of Vascular Studies or something like that is showing that it's better. They've been featured in studies. They're supposedly 30% better at catching false negatives. So again, they help you detect when the traditional method doesn't help you detect. There's a bunch of benefits that they highlight, and that's why this company was doing well, right? This company was being adopted. And you have to understand a little bit of history about the PAD detection. Historically, PAD has been done by a test called ABI, ankle brachial index, and it's a test that may take 20 to 30 minutes. It's done by a medical professional, and with that test, you can assess the extent of PAD and whether someone has PAD or not. That test has been around for a very long time. It's been around since the 1950s. And quantum flow is coming with a better product, easier product that just takes 5 minutes from a medical provider. The medical has to do not much, and it detects some false negatives. So when I answer the question, how many times better is the product? Well, first of all, it's at least 4 times better because it takes 5 minutes instead of 20 minutes. That's A. And then B, I had another X, right? So I said it's 5X better because it detects things that the traditional method doesn't detect. And also you have human bias in the traditional method. A medical professional may not be doing it right, etc. You don't necessarily have that bias with the software associated with the quantum flow. So the product is, in my view, better. However, what's the problem then? Why is the stock cheap? Why did the stock go down over the past 2 years? Well, when it comes to healthcare and regulated healthcare, actually it's the government that picks the winners and the losers. These medical equipment devices are all of those products that are sold to insurance companies, to hospitals. They're largely influenced by the regulator in the form of Medicare and in the form of the reimbursement. And why is Medicare so powerful, right? Because most people who spend a lot of time, unfortunately, at the clinic or the hospital, they're going to be 65 plus. So that's why Medicare has an outsized impact on whether a product is successful or not in the health sector. And the government had picked the quantum flow. They thought it was a great device, and then of course it's all about saving costs right now. So surprise, surprise, in March 2023, surprise, surprise, they were not picked anymore. They were removed from the HCC code related to PAD, which is a fun way of saying that you're not getting reimbursed anymore in a lot of your patients. Your asymptomatic patients, you're just not getting that extra boost from Medicare anymore. And it's a 3-year phase out. And Medicare is phasing out that code, which means that the providers don't get nearly as much money. And so what happens when you're a provider and you have an incentive to make money? Well, remember, there's a free option called the ABI test. So the providers are slowly going back to that free option. even though they had a better option for many, many years. So simply put, without the extra reimbursement from Medicare, providers are just going to instruct the medical staff to switch back to the traditional ABI method. That method is from 1950, introduced by Windsor in 1950. And of course, it's a less effective method, but this sector is crazy. If you ask me, the sector is crazy. It's the government who picks the winners and the losers. So if you had been the founder, this company's founder-led, imagine your frustration when you work on a product and then it's the regulator who says, sorry, you're out. It's not the rules of competition. It's not the rules of the market. It's the regulator who says you're in, you're out. So the free market, even though I believe it would choose the technically current situation, that's not how healthcare works. As an aside, I believe we would be much better off if we had these big tech companies develop our medical devices for us. When you see the hoops that Apple has to jump through whenever they release that Apple Watch. If you watch the keynote yesterday, the Apple Watch can detect a bunch of stuff. It can disrupt so much in healthcare, and the 3 big announcements they made in health: pending FDA approval, pending FDA approval, pending FDA approval. The speed at which these regulators move is like a snail pace, and these tech companies move super fast. And not only do they do that, but they pick winners and losers. So anyways, I'm a lover of a free market. That's not the way it works. So what will happen to the sales, given that healthcare is not really a free market? Well, what will happen is that providers, the clinics that are operating still in the free market, or that are mostly dependent on the free market, or that are, say, more tech inclined, but maybe get reimbursement but are more tech inclined, they're likely to keep the QuantaFlo because it's the better product, right? They're likely to do it if you're private pay, or if you advertise it to your customer and your customer just pays for it out of pocket. If they're under 65, they're likely to offer it. Why not? It's capitalism. It's a free market. The customer as a doctor, the doctor say, I can recommend a better test, or I can recommend a test from the 1950. Do you want the modern current test? Do you care about your health? PAD related to atherosclerosis, right? Atherosclerosis, leading cause of death. Maybe it's a good idea to know if you have it when a method can tell you have it, whereas other methods can't, like the ABI method. So those will keep the QuantaFlo, yes, but a great many, and I would argue the majority, unfortunately in that sector, the majority will revert back to the quote-unquote free ABI test, the one from the 1950s. And so now it's up to QuantaFlo to make sure that they don't get dropped from all of these providers. And so what they've been doing, for example, is they've given volume pricing to try to get some of these providers to stay on and to keep using the device, even though we're not going to be reimbursed as much, right? It's 33% less in the phase out in the reimbursement that you're getting. So that's one of the things they've been doing. And another thing that they should do is they should, emphasize to the providers that actually QuantaFlo saves you time. So, if you have a bunch of nurses sitting idle doing nothing, then I guess it's not a good argument. But if you're a very busy hospital, the QuantaFlo saves you time. So that's a selling argument. And of course, it's about teaching the providers, the doctors who decide on this test, teaching and educating them about the benefits of that. So we'll see, but they have to fight to keep these sales right now. Otherwise, people will revert back to the free method. They'll just revert back to the free method. So what does that mean for the revenue? What does that mean if every single provider goes back to ABI testing from 1950 and really they don't use the modern way to detect a PAD? They don't use that modern way, right? They revert back. Well, what will happen if you do that? And so you can see it started happening is the revenue is slowly decreasing. And we have a 3-year phase out. We have a 3-year phase out, and it is decreasing for 3 years. And then the revenue will increase again, in my view, because it will be at clinics where there was never any reimbursement. So I think the long-term revenue for this company is lower than what it is today because we are still going through a phase out. So what does Semler do in this situation? Well, they would have two options, right? One of them would be investing in new products, developing new products, to be covered by Medicare, investing, acquiring another firm. That's one thing they could do. Another thing they could do is just assume that it's too risky to acquire and develop a new product and just buy Bitcoin as opposed to the bonds, because the bonds lose value. So just buy the Bitcoin. And what did they decide to do? Of course, they decided to buy the Bitcoin. So if you look at the numbers, since revenue is going down for Semler, I can't really use EV over GP over RG. That is not a possibility. I can't use that. But I can look at the traditional value metrics, which is how much cash are they generating compared to their revenue A, and then compared to their enterprise value B. So the revenue was 61 million trailing 12 months. Keep in mind that's declining. The EBITDA margin is 36%, so that's 22 million of cash flow potential. Current enterprise value is 152 million. So if you do EV over EBITDA, EBITDA is my proxy for cash flow, you get a 6.9x EBITDA or a 14.5 EBITDA equivalent cash flow yield. So it's cheap by any standard. But wait, that's not it, right? They adopted a Bitcoin strategy, right? And of course, EV calculations don't subtract the Bitcoin yet. They probably should, but they don't. So we got to do a Bitcoin adjusted EV evaluation where I subtract the Bitcoin, because there's no business risk associated with the Bitcoin. In my view, it's better than cash. And I subtract back to the EV. So if we subtract the Bitcoin to the enterprise value, we can see that the Bitcoin adjusted enterprise value is $93 million. And in that case, the Bitcoin adjusted enterprise value over EBITDA means you are getting a company that's trading at a 4.2 times multiple of the cash flow, or a 24% Bitcoin adjusted EBITDA yield. And they will convert these 24% to Bitcoin, as the CEO has indicated, right? The CEO was at the latest Bitcoin conference outlining the strategy. We are following the MicroStrategy playbook. They will invest the cash flows into Bitcoin. So the valuation is very compelling already if you don't believe in Bitcoin. But if you don't believe in Bitcoin, you wouldn't want to be interested, because they will convert those cash flows into Bitcoin. So that's point number one. But if you believe in Bitcoin, this is a leverage play, in my view. This is a leverage play. This is what they could call a synthetic miner, right? A synthetic miner. It's like you're not actually mining the Bitcoin, but at the end of the day, it's the same thing, because you're going to be yielding 24% on the business, and you're going to put that into Bitcoin. So you're a synthetic Bitcoin miner in a way. They haven't quite followed the playbook of MicroStrategy in the sense that they bet the full company and borrow so much money to short the US dollar, which is what MicroStrategy is doing. But it's pretty close, and we'll see where that goes. So in conclusion, there's a lot to love about Semler. I haven't bought that stock because I have a lot of MicroStrategy, a whole lot, and so I haven't bought it because I have my exposure in there. If I didn't have MicroStrategy at the cost basis that I have, I would probably be very interested in SMLR Stock. Me, it's just a matter of my portfolio. I have MicroStrategy, so I'm good. But if one were to enter now, I think it's a very compelling play. Of course, this is not what I'm doing, and this is not investment advice, and this is not financial advice. This is just entertainment. I hope you were entertained. I appreciate your likes, appreciate you subscribing to the channel. Thank you for watching, and have a wonderful day.